Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Our sponsor Blue Guardian is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
Hey, what's going on, y'all? It's Brinks Trades back with another week of live breakdowns. Hope everybody is doing well. Let me go ahead and share my screen. Let me see. Tony says, go, hey, what's up? Flex, new president, new markets. I think the markets were always going to be good, regardless of who won. I think that's kind of a big misunderstanding on how things move. The big thing that everybody was talking about with the economy a couple of months ago, I think Jerome Powell had mentioned that the Fed was now trying to bring down interest rates, which is going to basically have an impact on inflation. So honestly, I think whoever would have won, would have probably not affected the markets too much, to be completely honest. It's all a big game. Anyway, so let's see, new president, new markets. Okay, so what else? So if you guys don't know me by now, I am the Trading Nut indices futures. I'm gonna dub myself the futures analyst for the indices for the Trading Nut podcast. If you guys haven't been following me for the last year on here, really, I've day traded with 10 years of experience. Again, I started trading Forex about 2014, 2015. Again, March 2015 will be my 10-year anniversary of me actually being live in the markets. It's been a lot of ups and downs in the journey. Since then, had an opportunity to really just, grow my knowledge and eventually grow my skill set in my account. Funded over 1 million in futures, prop firms. At one point in time was funded 700K in Forex funding as well. So I've been around this markets, I've been around this game for a long time, and I just want to impart all of my knowledge and wisdom into, you guys, the viewers. So if this is your first time, I break down all the charts for really the futures markets that I look at. So the currency futures, which will be, again, the equivalents of Euro USD, USD JPY, Euro USD, and GBP USD will be the main ones. So the Euro futures, the pound futures, again, the yen futures. I might even look at some other ones, but they'll usually be like the majors for futures versions of the majors in Forex. And then also what everybody has really been fascinated with over the past year or so are the indexes. So when we talk about US500, US30, and the NASDAQ. So US30 is the Dow Jones, US500 is the S&P, and then NAS is US100, or you might hear it referred to as NAS100. So I break down all those and kind of get my thoughts on what I think the market's going to do over the next few days to a week. So as you guys know, there was a huge election in the United States. I want to keep this kind of channel politically free just because, it's been a lot of this is a pretty divisive election on whatever side you stand for. So I really kind of want to keep the chat free of kind of political commentary, and just kind of dive straight into the technicals. But, again, with that being said, I want to basically call back to, announcement to the chat and really on here about just staying clear of elections. And you know, a lot of times what usually will happen is the market makers or the people that really set price in these markets will use these elections or these big news policies or big news releases, big moments in our culture, in our economy, and really things that can affect a lot of these things to really drive and price and move things. And if we are looking at like the dollar index, I want to look at dollar index. Uh, I mean, this was election night, right? So this was election night. We ended our down here, and we had a huge gap in the markets up here. So I'm gonna get rid of all of my stuff in the charts. You guys can see this clearly. Again, huge gaps that will come in during these times, right? And so if you look very closely, again, if you guys are currently in my free mentorship that's going on my YouTube channel, shout out to the YouTube channel. We actually hit 200 subscribers yet this week, I think. So I'm glad that people are seeing the value in that and joining that. If you guys are interested in being a part of that, go to my channel, Brinks Trades, BRINX Trades. I'll link this before we hop up the call today, and yeah, follow there. I do a free mentorship, that's going to be held every Sunday on for about an hour around 2 or 3 o'clock Eastern Standard Time. It's all uploaded live and the videos stay there too, so you guys can go back and learn. So I basically just teach a little bits of insight into how I see the markets, how I personally trade, and this mentorship specifically is focusing on Forex. So how we see the Forex market. So really, I mean, if you've been in that mentorship, you can kind of see a few things, right? So you can even see how the power of three works in situations like this. So we have consolidation, manipulation, distribution, right? So even in these news events where it seems like no one knows what's going to happen, or no one in theory knows for certainty what's happens, you can see kind of like the fingerprints of price on that. So again, I want to go back up to the weekly time frame just to kind of get a better understanding of what we thought was going to happen. So even before all of the news and things like that, we had a couple levels that we outlined that we wanted to see the market run to. I'm going to clean my charts up a little bit because I don't want to confuse a lot of people about with all these noise. And again, I'm a trader. I really trade. So it's one of these things where like a lot of gurus come on here and they mark these charts up, and you come back the next week and their charts don't change. Like, no, I really do this. I'm really actively looking at this stuff every day. I'm really taking positions and I'm really making money. So with that being said, again, our long-term target I see the market really hitting for is this. And the reason for this is we can talk about relative equal highs. So these highs right here, here, and here, we know there's going to be a buildup of liquidity kind of sitting over this high. And there was a couple levels that I wanted to see the market hit. Again, this is our long-term target, this level at 105.46. And there's a volume imbalance in the daily time frame, a few levels here, right? So there was this old civvy here, this red gap, this red box represents a civvy that, again, was one of our initial targets for last week. We shot through that. We ended up trading into this volume imbalance and respecting it somewhat, right? If we go down to the daily time frame, actually, this is a monthly. It's a weekly imbalance. Yeah, sorry, it's a weekly volume imbalance here. Let me clean that up. And so again, that was kind of our secondary target, our initial target for this week. Again, our long-term target is going to be these highs, these relative equal highs, and sitting with this buy side liquidity sitting at 105.63. So that's what we're heading to. That's what we think the draw on liquidity is, especially since we're in an uptrend. Again, I said this, I think on the YouTube channel, I made a post, or hopefully it went through, but I made a post that basically says, in uptrends, we're looking to really, go after buy side liquidity and really go after old highs. So in this situation, we're going to be basically violating and disrespecting old liquidity markers, or old markers that really represent bearishness. So old civvies, old lows, right? We're going to be violating those. So again, I expect, these on the way to this target, fair value gaps like this to be violated, right? And so we'll see if we do hit this long-term target. If the market gives us some signs that it could be reversing off of this, we'll stay kind of tuned for that. But ideally, again, I want to see this kind of hit that target. So what I'm looking for this week is a couple of things. I'm going to get rid of this because this is what we wanted to see last week. We actually got that. I mean, we came out of the gate on Monday, kind of dipped down a little bit, and then obviously hit this civvy and then shot through it. So that was pretty much a successful week of call outs, or I guess of projections. Even with all of the election news, right? So this week, what I want to see, what I would like to see happen is us to continue with this bullish trend. Potentially retest this old civvy here. If I go down one time frame to the 4 hour, yeah, definitely see us doing that. So retesting this old civvy here, and then I'll be looking for last week's old high to get taken as an initial target. Again, if we get a very kind of like, energetic run, we could see that high taken out this week. So for that, main target high, that 105.61 taken out this week. So ideally, this is what I want to see happen. Right. So that's ideally what I want to see, is, again, a stronger dollar in this case. Again, we'll see how price reacts around this zone right here, this old volume imbalance level. We had a huge rejection off of it, and then we also failed to really break through it the second time through. So again, I want to see what happens here. Ideally, there's not really a reason to be bearish at all. There's not really any broken structure. I mean, there is the chance that we could come back down here and fill this gap in down here and then go higher. We very well could come back down into this zone right here, which would be that old gap. I'm gonna get rid of this and this as well. I'll go back up to the weekly time frame. Yeah, I'll leave that there. Just make a note. Let's see. So ideally, I'm still very much bullish. I mean, there's not really a reason to be bullish. Sentiment in the markets is basically saying like, hey, like, we're gonna go higher. So Andrea, a civvy is what's known as a sell side imbalance, buy side inefficiency. It's basically a type of fair value gap. If that doesn't make sense to you, it's perfectly okay. It's not going to make sense to you in the next 30 minutes. What you can do, though, is go to my YouTube channel, Brings Trades. Just drop the link to it right there. And it popped up on all these little trading nut, windows. But go to my YouTube channel and then subscribe. Go under the playlist that's 2024 mentorship. And I started breaking a lot of these concepts down. It's a live mentorship. It's actually active right now. I'll go and I'll show everybody like where that is on my YouTube channel there. But I started to break down some of those terms and concepts there, and it'll help you if you have somewhat of an understanding of Forex, even a little bit, like you just know the basics. It's cool. Once you can go straight there and subscribe, and I break things down a lot easier. So don't feel like you have to know everything in the next 20-30 minutes. But today is not going to make sense, but you can still definitely watch. Okay, so again, so bullishness, right? We want to see dollar go higher. So that means, again, if we want to see dollar go higher, that means we want to see, if we're thinking like Euro futures, or we're thinking pound futures, it's basically the futures version of a Euro USD, right? Or a pound version of GBP USD. So we want to see dollar go higher. That means we want to see euro go lower, right? And so going to Euro futures, again, 6E1 is Euro futures. It is the same thing as Euro USD. It's just the futures version. If you're trading in the futures market, same thing. Last week we had a couple targets nailed out. I'm gonna go. I wanted to see this weekly time frame. So going back 1 week, and again, you guys can check the tape last week. I wanted to see the market take out. I'm gonna get rid of all this stuff because I feel like individually removing it. Coming into last week, I wanted to see the market kind of run for this low right here. And I wanted to see the market potentially stay below a couple of levels. The first level was, again, consequent encroachment of this wick right here. Right, and again, I'm drawing it out, redrawing it all right now. But if you go back to last week's kind of chart breakdown, you can see all this stuff. I'm just, again, drawing it over because I just erased everything. But again, we wanted to see the market really stay below this old sell side imbalance, buy side inefficiency, SIBI, that red box, on the way down to this low here. This low was our target for the week, right? We wanted to see the lows get ran here. And so again, oops, this is what we were looking at last week. Right, so ideally from a weekly time frame perspective, we wanted to see the market really stay below, at best, this fair value gap here, right? But ideally, if it's really going to be bearish, then this consequent encroachment of that wick, right? So those are kind of the two levels that I was looking at that the market could run to really reverse, right? And so if you go on the daily time frame, coming into last week, this is really where we were standing at. And so if we kind of fast forward this 5 days, the election was pretty crazy. This was the election, and we ended up running out. So this huge wick was London session for right at the night of the election, or like as the election was being determined, right? And so this is one of the reasons that I tell everybody to stay out of the markets, because even though we knew what was going to happen, or even though we knew what we wanted to see what was going to happen, I didn't really expect it to all happen like this, right? And if you're not experienced trading, I mean, there's plenty of times where elections can run old highs like crazy. They could have traded all the way up to here just to drop down, right, like this, right? And if you don't have a lot of experience trading those, or even if you do have a lot of experience trading those, you can see stuff like that. And this can happen in 2 minutes. It's a crazy amount of pips, right? But it can happen in very short amount of times, right? And so my whole trading style, and what I tell my students to do is be very cautious when it comes to trading. You can trade the safe setups and make enough money, right, to pay for your lifestyle or to do what it is that you need to do, like be successful as a trader, right? Like I only take really 1 or 2 setups a week, and I make decent money trading. Again, you can go back and look at all the results on my Instagram page and things like that. But I don't overtrade. I don't try to trade every setup I see. I try to find the ones that are the peak best opportunities where I think the market could go, where I think it's going to go. And when elections are happening, again, this gives the market makers, this gives the algorithm, right, the opportunity to run old levels to the extreme, right? Because people generally expect a lot of volatility when it comes with elections, and it gives them the opportunity to do things that they normally wouldn't be able to do on a day-to-day, right? So they could have ran price up here just to take it back down here, right? Or they could have did something where basically hunt stops or hunt liquidity, right? And so I don't want anybody to kind of hop in those markets during those times. Really, let's set back and let the market do what it has to do, right? And so if you guys were in my chat, I was really telling people stay out of the markets. The Tuesday, I told everybody the week, but then I said specifically like the day of the election, the day after the election, really, and then kind of the aftermath, right? And I ended up taking a position on Friday. which I guess is technically what I'm advising against what I advised everybody. But I also kind of was able to sense that the markets had calmed down, um, and they weren't as reactive as I thought they were going to be, like in terms of like hunting volatility. But in most scenarios, most situations, there's no reason to be in the market the day of the election because I've literally watched people blow accounts in 10 seconds, hundreds of thousands of dollar accounts. Like I've watched a 200K account, live real money, get evaporated like that because people wanted to gamble and play games. So as a trader, you have to know when your strategy should require you to stay out of the markets, when your strategy should require you to stay in the markets, and go from there. So, again, what we wanted to see was this low taken out, this sell side low, liquidity taken out there. We got that, right? So then we have to kind of ask ourselves, what's the market going to do next, right? Well, when it takes out a level, again, we do want to do one of two things. We want to start projecting the next low out, or we want to kind of take the market and see like what's going to happen next. And really, I think this level is going to be the level where we're inevitably going to get to when it comes to trading. This is really what I'm aiming for. It's kind of like my all-time target. Kind of like in the same thing on dollar. What I talked about is like this is going to be like our almost like final objective here. And the reason for that is going to be there's going to be two reasons. Again, we have this sell side liquidity here, which is what I just outlined right there. And this level is going to be at 1.0651. The numbers might be different if you're trading Euro USD, but again, the charts look the same, right? They look pretty much the same. Let me hide this and zoom in. Same charts, just the numbers are slightly different because the volumes on each chart are going to be slightly different, right? There's going to be a different amount of volume on the Euro charts than there are the Euro USD charts. So, but ideally they're going to be very similar. So ideally, this is what we want to see happen here. We want to see the market run for this low continuing on, especially since we took out two major lows. We took out this low right here and this low right here. And I didn't expect all this to happen in 1 week. I thought this might have been like a 2-week thing, especially when we started trading back up into this range here. But ideally, from a weekly time perspective, there's a couple things that I'm noting. Again, the first one is this low here. The second one is this this buy side imbalance, this fair value gap here, which is a buy side imbalance, sell side inefficiency, right? So I'm gonna make it green. I think we could dive deep into this and specifically really looking at consequent encroachment of this gap, right? I think that's a level that we could potentially run to. Really, momentum is on our side here. Again, if you're one of my students, you can see the concepts that I talk about here on a bigger time frame. Right? We have consolidation, we have manipulation above old highs, right? These old highs here, and then we have distribution, right? So when we talk about those things, again, you want to be looking out for those things on a higher or smaller time frame. These are the same concepts play out, over and over and over again because this market is algorithmically driven. It's a big computer program, and if you learn how the rules to the video game, you can play the game, right? So again, that's ideally what I want to see happen. I want to see the market really run for this objective here, which again will be inside of this box, this fair value gap here. I think this is pretty feasible target. Once we start getting deeper into this gap, then I kind of have to take a step back and see how it responds to this zone. And again, whenever we hit a major target in the markets, we want to take a step back and kind of say, okay, cool, the markets hit our targets. Is it going to keep running through in search of lower levels of liquidity, like these lows down here, right? Or is it going to react to this and go back up? Because this is a bullish liquidity marker. So it could go higher after this, right? But we don't really know that for sure. And this overarching thing is one big consolidation. So I wouldn't be surprised if in the long term we do something like this, right? Because this is all really consolidation, this huge thing. It's monthly chop, monthly consolidation. So again, right? I wouldn't be surprised on that. Or we could invert it. But again, since these are dealing with higher time frames that are weekly and monthly time frames, um, I'm not trying to over project, right? I'm really just trying to go week by week. What is a clear objective that I think the market can run to for this week? So again, this is what I'm going to be looking for, that low at 1.60653. If you're trading Euro USD, it's going to be 1.0603. So it's very, very similar. So okay, pound futures. Let's take a look at pound. I haven't really looked at pound over the past couple weeks. So I've been saying a few things on pound. So pound is again should run very similarly to Euro USD or Euro futures. But I've been saying a couple things. And the first thing I've been saying with this one is ideally I want this to run bearish again, because you think about GBP USD, right? Again, which is the same thing as pound futures. GBP USD, if we project dollar to go up, right, that means in relation to the dollar, the pound should be going down. So the pound's going down, that means pound futures should also be going down. So it's the same thing, same idea there, right? That's why dollar analysis is so important, and you should always lead with understanding where you think the dollar is going to go. It just acts as an extra confirmation, and it acts as something that you can kind of match up with the other currencies or other asset classes. So again, ideally I want to see this go lower. The problem here is a few things. We have this BISI here, this fair value gap here, and which is a bullish fair value gap. In theory, when we see these, we should be expecting price to go higher. We also have this order block here, right? And so in order for us to really continue to go lower, which I think is what is going to happen, we have to invert this. And so an inverted fair value gap very much is like broken support turned into resistance. It's like kind of like the same concept here. Oops. So ideally I want to see this inverted. And so I've been saying this for the past couple of weeks. And this will only be really a safe trade for me if we see this broken through and start to retest and continue to go down, right? So if that happens, then I'm going to start to look for shorts, because I expect all the other asset classes to go down. I'm sorry, all the other correlated classes to go down. So that means like GBP USD should be going down, Euro should be going down, dollar should be going up, because I think dollar is going to go up. I'm not going to buy against this, right? So even if we start to see price, respect this gap and go higher, I can't really buy against this because I expect dollar to go down, right? And so it's just one of those things that you have to know, that when you're trading, kind of like the relationship between different asset classes and things, and how that should affect. So because even if it starts to go up and it starts to reject this, which in theory it should, because it's a BISI, right? I don't want to see this. I'm not going to buy into that. I'm going to pretty much sit this out. And that's probably why I haven't been trading pound as much. I've really been focused on euro because it's very much lined up with what I want to see, right? And so when you're trading, again, currencies are going to do things. You should have an expected bias for what the currency should do in relationship to other currencies and in relationship to what the market is showing you currently. And so based on that, I've been really focusing more on euro than this. So until this happens, until we get an inversion of this where this breaks through and then goes lower, I can't really project this or I can't really take any setups on this. Now, the minute this really closes below, I would say like consequent encroachment of this order block here. So, boom, something like that. I would say like below this level here, then is when I'm going to start to look for setups, sell setups, whether it be a break of structure, I'm sorry, a retest of this gap, or some breakdown in this range here. So until that happens, I can't really project anything, but I think it's going to happen based on what I'm seeing on the other ones too. So just waiting on the inversion. I can't really project anything right now. Andrea, you said, how do you access entry? I'm not sure what you mean by that. Do you mean access entry into the YouTube channel or the playlist, or are you talking about like how do I take an entry on the trade? I'm not sure what you mean by that. Um, all right, so let's go to the big stuff, which is let's start with NASDAQ. Um, I think in future classes, I'm going to involve other currency futures. I'm going to look at pound yen. I'm going to look at uh, the Swiss franc futures, and then the last one I'm going to look at is the Australian dollar and New Zealand dollar futures. Again, they're going to be the same thing as Euro USD and AUD USD, but like um, and New Zealand dollar and USD JPY, they're going to be basically the same as the majors. But again, I want to kind of play with those and kind of do some analysis on that in the future ones, because there's good stuff there too, right? So let's go to NASDAQ. All right, so NASDAQ basically so last week we actually got this wrong. And again, one of the reasons I haven't really been trading NASDAQ is again because of the election, and then two, I usually pick a asset class that I think is going to be the clearest thing for me to see target wise, and there's no confusion and a clear bias, a clear direction. I'm just trading in line with that. And Euro futures and the currencies have been just more clear to me over the past couple of weeks. So ideally, we saw a couple of things in the market. We came into the market last week, and we wanted to see this really drop. Now, mind you, again, it's an election week. It's an election year, so over the long term, I thought we were probably still going to get back up here. I thought we were going to see something potentially like this, where we trade down to this old BISI and then go higher. But instead, we just kind of took out that first low, and then reversed. Right? Again, this all happened during election week, so this was the Thursday or Wednesday. I'm sorry, the Tuesday, Wednesday, Thursday, Friday of election week. So this is all based on the all results that are kind of based on the election. So I thought, again, what was going to happen is we were going to go lower off of this, and then it actually inverted this. So the minute that we kind of took this out on Wednesday, I knew that we were going to potentially go higher. So once I saw that invert, I was like, okay, we're probably going to keep going running up. And that's exactly what we did. That's exactly what we did here. And so again, the market really ran higher off of this. Going into next week, what I noticed here is that we did slightly kind of take this high out. So I'll be looking for this to continue to run higher. This fair value gap here is going to be really key. In this situation, because we kind of narrowly took this out. I would have felt a lot more confident if we would have had a stronger run above this high. So like maybe we closed up here or something like that with that same gap. But even with that being said, I think kind of with the current sentiment in the market, we're probably going to see something like this going into next week. We could see something like this and go higher, or this secondary imbalance here, which I think is probably the more ideal one. I would like to see the market really run for this one instead. There's an order block here, that type of thing. But I think also, again, with the current sentiment just like being extremely bullish, and how investors feel with, I guess, again, the results of the election, in the short term for sure, I think we're going to continue to rise. So again, if we're looking at kind of like 4-hour levels where I think the market could potentially run to, I'm going to be looking at this zone specifically. I'm going to make this visible on the weekly and daily. So 4-hour VG, label that, and then something like this, right? We kind of scratch those highs just to run higher. This is ideally what I would want to see. My target, again, I can really only project, if we do come down like this, I can really only project the high of last week. So best case scenario, that's it. But ideally, NASDAQ is not something, based on the way that I trade, that I would look for any setups today. I'm sorry, going into next week because of that. So I like to see kind of price. I actually don't like price when it trades to all-time highs. It actually makes it a little bit harder to call because you can only really project to one level of buy side, which is going to be this high right here. So again, I'd like to see a deep retracement off of this and going down to 21,030, and then just really to run back up. That'd be the most ideal scenario for me. I'll also be looking at these secondary levels here. Just it really depends on how the market opens up on Monday. So I'll be looking at this level here too. Again, this is consequent encroachment of this wick. It's also halfway of this order block as well. It's just below this fair value gap on this 4-hour time frame. So that's the secondary level that I'll be looking at. First level for pullback. And then the most ideal level again will be this 4-hour wick or 4-hour imbalance. So that's NASDAQ. I think every other chart made all-time highs for sure. Let me go to Dow Jones. I think Dow Jones also made all-time high. I'm not actually a huge fan again of trading when markets are at their all-time highs. I know with the current sentiment, we probably should expect continued bullishness, but expectation, just saying things are going to go up, is how a lot of Bitcoin traders got wrecked, or cryptocurrency traders got wrecked, because they're always trying to buy off of the highs. My whole trading style, is centered around not buying at the highs. It's actually selling at the highs. So I'm not going to say it's not safe to trade with this current market sentiment, but it's just not what I like to see. I'd like to actually see buying at more of a discount level. So again, I want to see, best case scenario, us run back into this old imbalance here and really come and take out this high. This will be, again, best case scenario. This will be, so 44,300, really running back to that. If we come out of the gate on Monday and we just push higher, then this is probably just times that I'll probably sit out. I'm not a huge fan of buying over highs. I think it's the easy way for you to get trapped as a trader. Just buying because basically people are telling you that you think it's going to keep going up. It's pretty much how dumb money operates. Again, US500, same thing. I want to see a deep retracement. I really don't care what the cause of it is. We'll look at news in a second, but I want to see something like that happen in order for me to want to engage in this market. So trading back into this range, then going higher. I think out of everything, I'm most interested in trading Euro futures this week. Again, that 5,000, that 6,000 level, that new all-time high that was just formed. I'd like to see something like this trade back into this range. Oops. Right, I want to see something like that trade back into that range. Consequent encroachment, then run higher. If we don't get that, then I'm really staying out of indices for this week. We're so close to the all-time high. There's really not a whole lot for us to really target. Most of the liquidity is going to be on the downside. So if we go back to the comment section, let me see who's in here. Okay, so sure, I already answered that question. Mark Cato says hello. What's going on, Mark? So I think that's all I've got as far as chart breakdowns. I want to look really quickly at Forex Factory just to see what's going on for next week. Again, if you guys know me, then you know that I also kind of don't look at the charts until I come to this call. I don't really do any pre-chat or pre-chart analysis before I come here. So I'm doing all this stuff in real time. New Zealand dollar on Sunday night, there should be some news. So maybe Sunday session, Asian session might be a little volatile if you're trading Asian session pairs like Japanese yen or New Zealand. Going into Monday, nothing. There's a bank holiday in the US. Oh, it's Veterans Day. Veterans Day is on Monday. So the markets might be pretty dead on Monday if you're trading indices. Just there's a bank holiday. Going into Tuesday, a lot of yellow folder news, but nothing that will keep me out of the markets for trading. Wednesday is CPI and PPI. So I think I would expect the markets to be kind of choppy going into CPI and PPI and then pretty smooth after that. So Wednesday on the 13th is when I'll be looking. PPI on Friday and Thursday. And then Friday, we have core retail sales. So nothing that would keep me out of the market this week. Actually, Fed Chair Powell talking on Thursday might keep me out of the market, depending on. Yeah, he might keep me out of the market after 3 o'clock. So when Thursday might be kind of a weird day. I would still probably would trade that morning session for sure. So if I see setups, I'll take them. But going into Fed chair, I do not want to be in the market when Jerome is talking. So yeah, I'm not going to be in that while he's talking, but I would definitely will be trading the other days of the week. I think Tuesday, Wednesday, Thursday will probably be the days that I'm looking the most to trade. Yeah. It's okay. So Tuesday, Wednesday, Thursday. So I'll stay on for any questions at all. But the last thing that I want to show you guys again is the YouTube channel. So if you are subscribed to my YouTube channel, you can go to Brinks Trades. Right. This is my YouTube channel. You go to playlist, please subscribe and hit the notification bell and all that good stuff, because you will be able to keep in contact with me as stuff goes, as more videos get put out, more lessons get put out. Eventually I'm going to put a lot of stuff on the YouTube, but the playlist here is the 2024 mentorship, right? And so this mentorship essentially has 3 parts at this point. I think it's 4 actually. And basically it's just, I'm giving away some sauce. I'm giving away some sauce for free. So if you struggle with your trading, you've never been consistent, which I know a lot of people have not, join me there and we can, hopefully get you at least trading in the markets, and getting you to the point where you can see things. I can't tell you you're going to be profitable, right? But I can tell you you're going to learn how to read price better than you've ever been able to see it before. So there's been some students, I know I probably have some students in here, some current mentorship students that, if you guys are in the class or if you've seen the class, both from the free version or the paid version, feel free to jump in and let me know how I am as a teacher. And, you don't have to hold back. But yeah, so that's again kind of my gift back to the trading community, like something that I do basically for free to just give back to some people. I know a lot of people are struggling. I'm not giving away all my sauce. I can't give away all my sauce, but I can give away something that I think can help a lot of people, especially when it comes to specifically Forex trading. So yeah, so hopefully that helps. Hopefully you guys, Forex or currency. So I guess it applies to the currency futures stuff as well, but I'm not really going to cover NASDAQ. I think I probably will save that more for like paid students because it's a little bit more complex. It's a little bit more, you can definitely make a lot more money quicker, but you can also lose a lot more money quicker. So I'm keeping that to myself. So if you guys have any questions, I'll stay on, but hopefully that helps. Again, I'm bullish on dollar, bearish on euro futures, bearish on pound futures, and really bullish on NASDAQ. But I mean, ideally, I'm not really going to trade that. So I'll stay on for a couple of minutes. If you guys have any questions, let me know. And hopefully you guys have a good weekend. Hopefully you had a good week. Just everybody put the phones down, go outside, enjoy life, get away from everything, and just, touch grass. So hopefully that helps. Again, I'm on here for a couple minutes. Hopefully I get some good questions. We can talk about them. If not, see you guys next weekend. Okay. Well, I didn't see any questions, so I hope you guys appreciate the weekend and appreciate the time and yeah, go have a good weekend. Peace. Yeah. Oh, real quick question, Andrea. I don't give entries and exits. I don't. First off, you got to be people who do signals. Um, they you got to be licensed to really give signals on anybody that charges you or gives signals away for free. Um, you technically got to be licensed to give financial advice. That's basically what that is. I'm just sharing an outlook. This is educational advice only. I don't give entries away because um yeah, I mean y'all gotta pay me. Like yeah, first of all, y'all would have to pay me a lot of money for that too. I think it's better to teach people how to do things and they can do and learn stuff on their own. Every signal service that I've ever watched, or even when I first started trading and been a part of, like um people don't ever really learn how to trade. They just kind of take them signals and run with them. And like one, this is a free thing that I'm doing for the public, so like I'm not doing that. Two, um, I got to be licensed and I'm not. So if you want to learn how to trade on your own, cool. But I don't do signals and entries and exits for trades. I did take one trade last week on Friday for the entries and exits, and I can show you where it is in retrospect, but I don't do like projections on where exactly I do entries on my trades for. I don't give signals away. So if that's what you're asking, subscribe to the YouTube channel again, and I'll talk about my trades tomorrow in class, but I don't do like signals, if that's I guess what you're asking. Okay, analysis. I see what you're saying. Okay. Yeah. Okay. So yeah, if you're in the class tomorrow, I'll go over the trades that I took tomorrow. I think it'll help. And I'm also at that point with the current students that we can talk about entries and exits. So um yeah, if you're in the class tomorrow or watch the video, then we'll get to that point for sure tomorrow. So hopefully that helps. Cool. Awesome. I just let people, set people's expectations up front with that. But cool. Awesome. All right. Well, I'll see everybody. If you're in the class, again, subscribe to the YouTube channel. And I'll see you guys tomorrow for the next class. If you're new, go back and watch the old videos. Hopefully learn something. And yeah, have a good weekend. Peace.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Our sponsor Blue Guardian is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.